Right, it's time to talk about the MACD indicator. You go to your indicators, it's up here. You're going to see it. MACD, the first one. That's the one you want to pick. Now, what does this mean? The MACD is a moving average of convergence and divergence, which is a trend following momentum indicator. And it's based off moving averages, and it helps to understand whether bullish or bearish movement in price is strengthening or weakening. Okay, so as you can see in the bottom right here, this is the one. There's all these numbers on the right side. You want to look at the 0, which is the baseline. So anything under the 0 baseline means the market it's more biased to the bear side. Okay, and everything above the 0 will be that the market is more biased to the bull side. Now let's correlate this with price action. Right here. The same as with moving averages, you want to look for a crossover for a bull signal or a cross under for a bear signal. Okay, so the blue one is going to be the shorter moving average here. So if it crosses over, it will be a bull signal. So right here, it's right here. So it called for a buy. Okay. And then it stayed over all this time up until here. This is what we call a sell. Right there. Okay. But then what happened? Markets regain strength, and you call for a buy again, once again here. And then all the way up here, we're crossed over again. Call for a sell. Market's losing strength. And so forth. We're going to keep looking at that. So we kept doing it again here. Sell. And then what happened? Markets regain strength and it's a buy again. And so forth. Now, another area that we can look at with this, delete all this first, will be a divergence. Okay, so what does this mean? So we can utilize and correlate price action with the MACD indicator to see how the strength of the markets are. And if it looks like it's going to keep going up or down. Now, let's see. We can take the two highs right here. This one high and this other high. As you can see, we're going to make an arrow that's going to keep going upwards, okay? Because we got a bullish movement. But how do we correlate that with the MACD? Let's take this high, the same high, right here, and then go up to the other high, the second high. What happened? It's actually flat. So it's not going up, but it's going flat. What does that mean? Well, the strength of the market is not showing us that we are actually gaining strength every time we go up. But we actually keep having the same strength, keep losing the strength. Okay, because as price movement keeps going up, our MACD indicator is showing us that the strength of the market is just the same. It's not keep going up. So that's an alert sign you want to keep an eye on, because a bear movement is likely to happen because we weren't able to make another high on our MACD. And surely what happens? We get a big dump because of that. Okay, so our MACD crosses over here, which gives us a sell signal, and price dumps all the way down. So you want to keep an eye on that. And this works in every time frame as well. So on the daily, you're going to have more confirmation, because the higher the time frame, the more confirmation you're going to have and more valuable the information is for swing trading, let's say. Because you can utilize this in a 1 hour chart. It's going to give you a lot more signals because it's a smaller time frame. You're going to utilize more price action. So you're going to have even more buy and sell signals with this. But you can utilize this not alone, but utilize it and add it to your strategy. as confirmation. Okay, utilizing divergences and seeing how the strength of the markets are compared to the price, and that's going to help you out deciding whether or not the market is going to keep moving up or it's just going to go down.